Good morning and welcome back to the Opportunistic Trader for December 18th, a Tuesday. I was actually, unfortunately, out of the office in meetings yesterday. I know my crew kept everybody up, and hopefully all in the chat did well. The market got annihilated. Tracy made a good call last week on the markets. I guess she's expecting another 80 points lower. The market bounced today. Markets overseas were in Asia were weak. The interesting takeaway for me is China had their year meeting or whatever, and the PM basically is not close to doing a deal. It almost looked the other way, he was telling the country that we're not listening to anybody, which makes sense, and we're doing our own thing. So I'm surprised that Trump hasn't been all over that yet. He is all over the Fed this morning, again, praying that the guy doesn't raise rates like it really matters. The market's in a correction. You know, Trump's the greatest market president, but if you average the returns over the last 2 years, he's averaging 8% a year, which is slightly above average returns for the market in its history. And it's going to probably get a lot worse. So,
and he has successfully placed his scapegoat label on Powell. So he's actually quite smart that way. It's Powell's fault.
and none of it's going to help him in the end. But
no, I understand.
I don't want to go down the political road.
No,
but the point is, he's just, it's ridiculous. The one standout today to me is oil, and it actually bounced $1 almost off the low. It's down another 2 to 3%. It's trading at in the 48 handle, which is amazing because 2 or 3 months ago it was in the 78 handle and 77, 78, and we were freaking out on our shorts. It came in $30 on a $70 product, which is pretty massive. There must be just a lot of supply, but it seems like the trades are in for year end, and it's a quarterly expiration at the end of next week. We're actually at the end of next week. The bottom line is it's going to be the opposite, I think, of what we've seen traditionally, which is a jam job up in the front contract and then leaving it alone. I think it's going to be all for sale and then maybe get a relief rally into the last week of the year. Small, very small, and end the year lower than we are now, but positive from the lows that we will make off this contract. Yesterday, ironically, markets went to the exact low of the year and bounced 40 handles quickly, as it always does. The one thing that's making me a little leery of this move is I've gotten 5 or 6 phone calls from people in the trading arena that are all bullish and think that that was the low of the year. So when I get that, I'm not as bullish. But the market is a bit oversold short term, but the pain is out there. And, CNBC switched the mantra from their bull mantra to a bear mantra, and they're throwing everything out but the kitchen sink to get everybody all scared and bared up. Even Kramer is bearish, which is shocking until we rally, and then he'll be bullish again.
He'll be right for 10 handles and wrong for 500.
Right, and we'll see how that goes. And overall, stocks in general are massacred. Most stocks are down anywhere from 10 to 20%. It's actually amazing that the S&P is only down 4.5% for the year. With stocks, everything I look at is down 10 to 20%. So I'll leave it up to you, Vince. You want to take us in a direction?
Well, on the stock market, I want to add some color because you may not have been in front of a TV traveling yesterday, but a lot of the selling came in about during the time that Jeff Gundlach was just putting out headline after headline on CNBC. First thing I want to comment about Gundlach is he's become very vocal recently. Not a guy who used to cheerlead much more than anything in the bond arena. But if you remember, if the audience remembers, 2 to 3 months ago, you started seeing every hedge fund manager in almost a political talking point way come out and say, I fear recession, Dalio, Gunlock, um, uh, uh, Druckenmiller, all the big fund managers, all the influencers of markets were basically saying, we're worried about a recession. And then it became stocks might drop. And then banks started putting out, we're worried about a recession reports. It's all out there. It started months ago. The dooming, and I say this as a trader, not as a person judging what they did. I feel that, and you can't prove me wrong, but yesterday I think proves me right that during that time frame, players uh, communicate, and I'm not being paranoid or accusing because I saw it happen in silver, and they all do have a legitimate bearish reason, let's say, okay, and then they kind of like any good trader, they push on a wall and they want to see how it floats. So they put a position on, and the market maybe reacts a little bit negatively. And to their credit, they really are making the market efficient. They want to force it to a head. They want to say, "Hey, the market's overvalued; it should be lower." And then you've got a cacophony, not a you've got a chorus, I should say, of fund managers and banks all being bearish, and then the wall's ready to tumble, and you put out a guy who, rarely talks about stocks, just reiterating over and over on CNBC how bearish he is. And so CNBC gives him that time of day. And while he's doing that, the market is selling off. So what I'm saying is if you're looking to blame Gunlock or fund managers that are talking the market down or algos, don't, because our markets are overvalued relative to my opinion, relative to where things are. I mean, uh, uh, we the growth that we've had for the last 10 years, the unemployment we had, I think Mike said this yesterday. Where would you expect interest rates to be? Not 3%, more like 7%. The point is, uh, uh, if you think Gunlock was selling yesterday as he was talking, you're probably insane. He was probably buying as the market was selling off. It's not to say manipulation is occurring. It's to say he's playing the market, and there's probably a lot more downside to go. Although it may not be so easy if you're just a straight short. Uh, I think following people who've been through these type of whippy markets, I wouldn't even say this is whippy yet. It's about to get whippy. Would be prudent to listen to people like Larry, uh, 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 and people who manage risk as opposed to just punt all the time. Uh, the market could rally, and when the market rallies, you may see another fund manager come out and push on the wall again. I'm just saying that is the low in? I don't know. Could we go lower? Yes, of course, but I don't think all the shorts have covered yet, and I think we will get another leg down, whether it be now or the beginning of the year. But and then you'll find out that Icon and Buffett were buying the lows. So this is the market. We have to play in this market. We have to be nimble and we have to trade based on our intellectual capital versus their inside knowledge, and that's how we survive, and that's how we beat the algos, because we do beat the algos. The algos are getting crushed by the institutional traders. Yeah, that's my 2 cents.
I don't have the evidence of that, but I hope that it's true. I don't
Well,
know.
the
There's so many
information, the
algos.
well, it's all empirical, okay, but the information, and you could draw, obviously I could show you a point on a curve, and you could say bullish and I could say bearish, but the information has been for the last 3 months. Dark pools have been selling stocks when algos have been buying, and the algos have been, as you've said, chasing it higher, chasing it lower. Yesterday, although I don't have the graph in front of me now, but yesterday, dark pools were buying. And dark pools means the macros have figured out, how to game HFTs, which is, let them let them run their course. HFTs are the new SAPs for the macro players. So that's basically it. I can show you at some point after this in the chat the graph of who's buying when the HFTs are selling and vice versa. But I do believe that the algos are the cause of the excessive volatility and present the opportunity, as you've said, for traders to lighten their volume, widen their stops, and make just as much money.
Yeah.
So I don't know either, but I'm working on handicapping.
I got a question for Larry. Yesterday, it was a bit of a reversal in terms of the biggest underperforming sectors were utilities, retail, healthcare, and consumer discretionary, all of which are the best performers on the year. So what are your thoughts on that as we head into year end?
I think people are lightening the positions, and they can't sell banks anymore because they're crushed. Can't sell financials. I mean, not financials, technology as much because they're crushed. So I guess it's people taking profits, against losses for year-end tax selling. But I don't think I take much from it. It's just basically, you know, they're just hitting whatever they can hit. Maybe it was profit-taking stronger sectors that have rallied up. But overall, the markets are, they're up a little bit today, but they don't look too good. Premiums are high on the S&P. It's a 20, we're going to have an up 250 opening day in here, and we'll see if we can hold that. But as far as what they're selling winners.
Yeah, I agree with that assessment 100% that it seems like into year end, it's just taking profits, getting ready for Q1, getting ready for next year, and kind of just taking something off the table / tax loss potentially, tax implications. What does that typically mean, though, when they start going towards the winners? Is that the sign that there's more to come, or any view on that?
No, I don't think it means anything. I think they were just taking profits on winning trades. I think tomorrow is very, very important for the market, and I actually think that either way the market's going to sell off big. It's just a matter of how big and from what. And if they raise rates, it's going to crash. We're going to have a down 150 point day because Trump's going to be out there going crazy. I do think at this point that the guy is too scared to do it. I think he needs to do it, but he's too scared to do it. So I think we will see no movement. The initial reaction will probably be positive and then very, very negative.
So you actually think no Fed hike tomorrow?
I said it's a very good possibility of no hike tomorrow. Yes. Obviously, if the market stays stable today, it increases a little bit of the chance. But overall, I just think the guy's too scared. He's got Trump breathing down his neck. He's worried about that. He's worried about pretty much everything out there. The guy is, worried about things he shouldn't be worried about. So I do think that there's a possibility that, he doesn't do it because of market conditions, which the market's only down 4% for the year. And if he does it, he's going to be like, that's it. The next move is going to be at ease. And, but my question is, if you really think about it, why does he need to do it? I mean, he needs to do it because he signaled it, and the Fed is always sticking to their fake signals. But why does he need to do it? What's the reason why?
Well, their mandate is looking at inflation and looking at unemployment, looking at jobs.
I understand, but they're also forward-looking.
If I can interject,
the Fed has to be forward-looking.
This adds value to both sides of the argument. Powell, at this point, he got lower oil prices, so he has his cover, to save face and to say back off on tightening. Right? Let's assume at this point that it's in all likelihood, all right, just for this point I'm about to make, if in all likelihood he's going to raise rates this week and say that we're probably not going to be raising rates in 2019, let's say that that's his position just for this reference point. Well, guess what? It's looking increasingly like we're going to have at least a partial shutdown of the government on Friday. For example, the Department of Homeland Security is one of the parts of the government that has not already been funded for next year. So, a partial government shutdown at the end of the week is looking like a higher delta chance of happening. So when you throw that onto this imagined point that I just said, where Powell is, we're going to raise rates one more time and then no more. He might say, because of the potential government shutdown, that's like the straw that breaks the camel's back. He could say with legitimate cover, if there's going to be a government shutdown, I think that will be bad. So I'm not going to raise rates. Or he could say, I'm going to raise rates, but if we don't have, but if the government shuts down on Friday, I'm prepared to undo that. I think no matter what happens after the rate raise, the risk is to the upside if you're short the market. So there's factors, like you said, and I think that's kind of the phrase that should be stapled to a wall. He's dealing with factors he shouldn't be dealing with, or pressures he shouldn't be dealing with, like politics, like a government shutdown. There's a lot on the guy's back, and he certainly would not be judged, I think, if there is a government shutdown and he didn't raise rates going into that.
Yeah, I don't know if the government shutdown is the reason. I think it's really essentially market conditions, but overall,
I'm just saying that's the cover he would have.
yeah. I don't know why he would need any cover anyway. What are they going to do? Yell at him for an hour? Or, any move he makes, he's only going to take heat, for a bit of time. And the truth is, the market's rallied for 10 years straight up. Everybody's overinvested. A lot of what Gunlock said yesterday is critically true. Everybody is indexed. Everybody is overlong. Everybody is long Apple. And the bottom line is, why should they always win? And, I got calls from my money manager to buy yesterday. He's like, you got to buy. I'm like, why do I got to buy? What's the reason? I think the market is going a lot lower. We're going to bounce. We always bounce. Well, maybe the one time we don't bounce. Who knows? But listen, do you think I could step in today and be a brain surgeon? You think I could come in and operate on? I probably could operate on someone's brain. The fact is, if you had brain surgery, you'd go look for the best brain surgeon around. In the stock market, any common guy can do this. All they got to do is buy SPYs and then buy more when we go down and buy more and never sell. That can't work forever. You know that. So we're involved in that environment right now.
A few things. One, Vince makes a point of, with both of your points, I think, you made the comment before, why do they need to do it now? And that is that, potentially there's a lot of uncertainty with China trade, also with the government shutdown, things like that. Hey, maybe just if things continue to accelerate as they have been, hike in a month. What's the big deal? I'm just looking right here. Credit Suisse actually on the markets just downgraded their 29 S&P forecast from 3350 end of year next year to 2925. So even at 2925, they're a good 15-20% above these levels. But that's the one thing the only thing that's really changed for the Fed is the stock market. Other than that, data is still coming in at strong levels. The only thing that's really changed is the stock market, and that's what we've always joked about. Are they actually data dependent or stock market dependent?
That's a really good point, and that's, I think, the difference between where the stock market is anticipating the Powell put is versus the bond market. This, if you're data dependent and you're ignoring the stock market, then maybe you're raising rates. But at some point, if the stock market drops low enough, then you affect the economy because you can't raise capital or finance. At some point, lower stock prices affect data. So it becomes a self-fulfilling prophecy. So yeah, there's a put out there. I agree with that assessment. He's data dependent until stocks get to a certain level, just like Yellen was. The thing is, I think his put's a lot lower than most others. He's data dependent until we're crying uncle.
Yeah. A few other overnight headline news. So oil's obviously down. Larry's been detailing that. We're right now trading 49.09 in Feb, which is down about 2.25%. We've traded down to 48.13 is the low. Nat gas has been volatile. Yesterday was down 7%. Today it's up 4.5%. Bryn was talking about that in the commodity tab, so you can take a look in that tab. She's already been talking about nat gas, and she'll have more on that Thursday. But definitely some volatility there in the energy market. We're going to speak with Phil Flynn a little later on that. But FOMC tomorrow, so they'll be having their interest rate decision at 2 o'clock, and then a press conference shortly after. Volatility, VIX right now is trading 23.78, down about 3%, but still, well above that 20 level. But interesting, so Japan overnight cut their GDP and CPI forecast for next year, and then Italy as well. Both cut their 2019 growth and inflation forecasts. China, as Larry talked about earlier, had their kind of press conference where they talk about growth for the upcoming year, and they were optimistic, but they said that potentially they should be lowering their growth forecast for the upcoming year to the 6 to 6.5 range, opposed to what's more been like the 6.5 range. So slight downgrade there, but they were talking tough on trade and.
Yeah, he was definitely talking tough on trade. But investors, I think, took that on the chin anyway, because there were no real concrete proposals of stimulus or reform. So tough talk for the U.S., but no relief for Chinese investors, I think, at least from that conversation. Sorry to interrupt, but I took note of that.
No, that's fine. And then, Larry, you've been talking about this trade for a while. It's interesting. The S&P was up 8-9% a few weeks ago now, let's call it 8 weeks ago. And China's equity market was down about 20-25%. Right now, China's market is down 22%, and we're now down 4%. So that trade is really...
there's a lot more in that trade coming forward. The best trade you could have on going forward into next year. Our market is overvalued. Their market is undervalued. Trump's running out of time. He's going to have to make some type of deal with them. He's actually going to have to make a deal with them. That's how crazy this is. I think the trade continues on, but looking at the board, I see the market up a lot, but I don't see stocks up.
So what's the trade today into the Fed tomorrow? Massive volatility yesterday. Even overnight, we're seeing a 25-point range. Are you looking to sell a rally, buy a dip? What's your thoughts?
I mean, today I don't see any likely. Unless something crazy goes on, sit on the sideline. I don't think there's 20 handles coming out of this market either way. I'd be a better seller, but I see much on a risk reward basis in front of the Fed. I think the better trade is to, wait it out and see what the Fed is going to do. Unless something really sparks my interest, I don't see much. And, maybe a buyer of crude oil goes a little bit lower. But overall, I don't see.
I'm looking at the straddle for tomorrow, which includes today. So remember, yesterday we had huge range. Actually, I don't have the number. We traded up. Initially, we traded down. It was interesting. Yesterday, we traded down to the 65 level where we are now. Then we traded back above 2,600. Then we got down to 2530. But the straddle, so if you take a look at that range, it was about a 70-point range yesterday alone. The straddle for tomorrow, which includes the FOMC, is only 43. It doesn't seem too high.
Yeah, it's down about $5 today. So Vola's down a little bit. Probably cheap, but the market, probably rallies in here a bit more, so Vol comes in. But I don't see a trade on that either. I don't, I'd be a better seller of that, but the bottom line is we're moving 75 points a day, so maybe it isn't cheap. The only nice thing you have when you do the straddle is you don't have to worry till 2:15 or I think it's a press conference tomorrow, so you're almost at 3 o'clock before anything real comes out. So really, that $45 straddle or $42 straddle is an hour straddle. Because there's only an hour after the Fed meeting.
Right, exactly.
Because nothing's going to happen all day tomorrow, so you're going to sit around. So it's really an hour straddle. So really, it is expensive, but I
That's
don't
true.
know. I mean,
It's
I
the
don't.
opposite of it's the opposite of a pin straddle, Larry. Remember, uh, the straddle. Try and scalp your gamma on a straddle on expiration day. You won't get the move until 5 minutes before the close, and until then, you've hemorrhaged all the money you can. It's like a pin concept, or the straddle will expire, and then we'll get a move the day after. So it's very similar to a pin
Hey,
concept.
Vince, question for you on gold. I guess there are a few scenarios, and we're going to go over a lot more over today and tomorrow, different scenarios for tomorrow. One of the scenarios is a hike and then they're dovish. I guess another scenario is they don't hike and are slightly on the dovish side. What are your thoughts on gold specifically based on the Fed here? We're trading 1252, which is the upper end of the range for the past 6 months. What are your thoughts on price action and possible, and even what volatility is saying on gold alone for the FOMC and into the end of the year?
I think if to talk about gold is basically to talk about the dollar and the Fed. So
Right.
yes, gold is definitely, although it's not the first thing you look at when you're trying to do Fed analysis, it's completely tied to it. And we talked about that today on the Gold Fix. But for me, quickly, the market, let's just say the market did nothing yesterday in gold, and it basically did. And I think that's because of two reasons. There was buying pressure because of basically dollar denominated, the dollar was weaker. And there was selling pressure based on a liquidation of people that are long gold to cover margin calls in other assets, kind of like Larry was alluding to, people selling utilities to take profits in markets for other stocks that they're closing out at losers. So that covers yesterday's activity in gold. And I think gold is pretty simple from here to the end of the year. Gold moves lockstep. Trade, unless there's a trade event that significantly changes things, gold moves lockstep with the Fed. If you're bullish gold because you think QT is ending, buy stocks. If you're bearish gold because QT is not ending, sell stocks. So gold will move strongly with the dollar, I think, going into the end of the year, even though there are conflicting forces right now that are trading because they have to, not because they want to. The lack of volatility in gold, as you noted, I think is a plus for the product, but not a plus for day traders. It will respect the technicals over a week, but it won't respect the technicals over a day. So I think gold is, if there's a rate hike, to put it in plain terms, think of it in terms of the dollar. If there's a rate hike, then the dollar, if there's a rate hike and he says he's not going to cut back on rate hikes, then the dollar strengthens and stocks sell off. If there's a rate hike and he says this is the last one, then the dollar could be mixed and gold would sell off because it's gold. If he says there's no rate hike for whatever reason, but he reserves the right to raise rates to save face because he has been a data follower reputationally right now, then the dollar screams lower and stocks go higher. So I think any finality to a rate hike, any lack of a rate hike is a signal for the dollar to weaken and for stocks to rally, which will bring gold along with it. But again, if you're bullish gold, buy stocks because it's Fed based. It's not inflation based. Hope that helps.
Yeah, absolutely. I'm actually looking at a stat, and like I said, later today and also tomorrow specifically, we're going to go over a lot of different scenarios and talk about different markets, whether it be gold, S&P, bonds, crude, dollar. What might the Fed based on a number of different scenarios? Because there's a lot. There's going to be the initial statement at 2:00, and then there'll be the press conference after. A lot to digest and a lot of opportunity based off it as well. Also, just looking at the volatility and what's priced in, things like that. What's interesting, as CNBC is ready to do their special of stock market plunging, beware, and everybody really talking how dangerous everything that's going on. Right now, we're in a 13% drawdown for the S&P 500 for the year.
From the highs.
From the highs. Yeah, from the high. 13%.
Listen,
which
nobody
is
in
just
their right.
beginning of
Right,
what
but
they call a
nobody in their
correction.
right mind ever looked at the market the way CNBC has everyone looking at the market.
No, I know. I'm
Okay?
just saying though. That's
But I'm
everybody makes
saying,
it think it's like a
but
burning
if
fire
we're
here.
okay, but if we're up 40% on the year and come in 20, are people losing money? No.
Guys,
Hedge funds are.
what happened yesterday is why
Crazy.
they're doing this today. It's about, I'm sorry to do this, and I'm not going to call it fake news, but Gunlock was headline after headline. U.S. stocks will underperform based on emerging markets. Stocks are going to sell off. The economy's in trouble. The Fed's in trouble. And CNBC's ratings must have been outrageously high. That's why they're going to talk about it more today. That's my opinion. Okay. They got ratings. They had a headliner, Gunlock, who basically sold out, in my opinion, and went retail, like Leon Cooperman used to be the man. And believe me, their ratings were outstanding. He generated Bloomberg headline after Bloomberg headline because you had a quality guy stepping off the perch on CNBC, and they got great ratings. And now, in my
But he
opinion,
came out the week
whether they're right
before
or
and
wrong, they're going to talk about shorting stocks because it gets ratings right now.
but he came out the week before and said the same thing. I mean, literally.
I know, but he really, look, he had an extended interview. They gave him an hour, and there was nothing but caps headlines all day long, starting at noon, and the stock market went down. I'm not saying he hasn't said all this before, Larry. I agree with you, but he said it through a megaphone to the public, to the naive public, to the educated public, and they gave him a pedestal and a format to do it. And I'm not saying he drove the market down. I am saying they got viewers. They got viewers. The stock market's selling off. A guy's telling you why it's selling off, and people are going to CNBC going, hold our hand, hold our hand. And they're going to do it again today. Read through the tweets yesterday, or find the headlines on
but
Bloomberg,
he's been ice cold.
Everything he said was a headline.
Right,
It's just ridiculous. And it was treated like it was God coming down from the mountain. Or is that Moses?
I get it, but he's been dead ice cold. I mean, he was telling people to short Apple into earnings like a year ago, and it exploded. He said rates were going lower and they went higher. Then he said rates were going higher at 3.25 and they went lower.
Please, I mean, these guys talk their position all the time, but what do you?
Yeah, but I mean, what kind of position could he have? That he's really a bond guy. I mean, what kind of
next year, and stocks are going lower. Now, that's also your opinion. And I'm not challenging you. What I'm saying is, I think he's just throwing shit out there so people continue listening to him because he's looking to cover U.S. stocks.
I just think stocks are going. I think stocks are going lower because they're overpriced and everybody's long them, and they're long them at really bad levels. Okay. I mean, let me ask you this: when are you selling Nvidia? You bought the stock anywhere from 250 to 290 because it never traded below that all year long, and now it's trading at 145. Okay, where are you selling Micron when it was trading between 50 and 60 the beginning of the year all year long, and it's trading 34? Where are you selling Goldman Sachs when it was 275 and now it's 168? I'm just saying, but they're never selling. They don't know how to sell. So the bottom line is
the media itself, as you have said, concepts like fake news, et cetera, is profit driven. And so I'm just saying that the information you're getting out of CNBC, and there's some reality in there. It's not all nonsense, but it only feeds what gives ratings. And to your point, who's going to buy stocks now? No one. And on the Gold Fix, we went over how they're going to start pitching you to short stocks, which is going to be a disaster. So this is only going to get worse for everyone who doesn't know what they're doing.
And I'm not bashing CNBC because I could care less who they have on or whatever. But overall, I mean, Facebook was $200 stock. It's 140 on an uptick. When are you going to sell? Never. You're down 30. All these stocks. You look at telephone, GE down 50 for the year. I looked at IBM yesterday. IBM is a $115 name with a $100 billion market cap, and it's been decimated. When are they going to sell? It was 170. Never.
Yeah,
they're never going to sell.
Where was Apple? Where was Apple when that friend of yours says his holding period is forever, or he's not going to sell ever? Do you remember that?
Yeah, 220, 230. I mean, we got longs in here at every level. It is not good. It is not good.
I love getting Vince and Larry fired up. Actually, that wasn't even the point of what I was saying. What I was going with the down 13%, but I love any chance to get you guys going a little bit. This is normal, though. No, all I'm saying is 13% is average drawdown.
But
Michael,
average.
we're not interested in the facts. We're just interested in having an argument.
The S&P, if you look at it at the end of the year, it's going to be down 2%, and everybody's going to be blown up. How does that work? I mean,
And I said it before. In China, they'll eat tree bark before they rebel. In the U.S., we'll cry if they raise the price of iPhones.
Oh,
The stock market has to go lower. They just have to control the descent, and that's what Powell's about.
We'll see what he's about tomorrow. He's on tomorrow, and my sniffer is leading me to believe he's going to do nothing.
Well, that'll be interesting. And like I said, we're going to be talking a lot about, there are a few big catalysts into the end of the year. We only have a few more trading days. The Fed is really the big one. The next after that potentially would be if there was a full-blown government shutdown. But the Fed tomorrow, we've been anticipating this for a while. So today and tomorrow, we're going to be talking a lot about opportunities and possibilities based off of price action, based off of what the Fed does tomorrow. We also have today Phil Flynn coming on at 10 o'clock to discuss the energy market and macro market. Interesting to get his views as we're trading 49.20 right now in crude. Then we're going to have options class at 11 o'clock with Tom McEntee and Vince Lancy. They've been doing a lot of great work.
We are today?
You better be ready for it. 11 o'clock.
Do I have the choice or option to cancel? No, I'm just kidding. I'll be there. I'm sorry. Go ahead.
So that's 11 o'clock. Vince will be there with that humor. And then 1 o'clock, another Vince heavy day. We're going to have the replay of his gold fix because I know it comes on really early and a lot of people like to listen to it. So we're going to do the replay at 1 o'clock. Then at 2 o'clock, CoQuest has put together a pretty good recording that they wanted us to record. So CoQuest is a company that has a CTA challenge, really tied into the CTA world, investment world, what trend followers are doing, things like that. And they've come up with about an hour-long presentation on CTAs, risk, and things of that nature, which I think our audience will find really interesting. So we'll be playing that at 2 o'clock. And as always, if you have any questions along the way, put them in the chat. And, we have a lot of people to help out. Any thoughts? Closing thoughts?
Quick self-plug before Larry closes out. Normally the gold fix is dated by the time it gets to noon because we're giving you levels for the day. But today's was more about watching how the stock market behaved yesterday in relation to gold and a little public service announcement on what to be careful of going forward coming from investment firms. So I offer it as a PSA, at least the last half of it, to investors, subscribers or not, because it's not just about gold today. There you go.
All right. One thing I want to leave everybody with is the trade that I really like is short volatility, short S&P. Again, that trade has been working pretty well. We're playing that for after the Fed and into Christmas and New Year's. We think volatility is pricing at 24 right now. We think there's a possibility if we mellow out that it could come in under 20. If we don't and the market takes another leg lower, volatility will go up, but we think the market will go down, more. And you can't look at it as on a percentage because you're trading a $23 instrument versus a $2,500 instrument. So you have to do that in a ratio to make it make sense.
That has been a good call. Vol has underperformed in the sell-off. And as you said, end of the year matters.
Well, listen, we're only at a 24 vol or 20, not even a 24 vol, and we're 150 handles if lower. Yeah, without a doubt. Anyway, I'm done. I will see everybody in the chat room. Thanks for joining me, Vince and Mike, and we'll be back after the opening. Good luck, everyone.